Hello everybody, this is the part 3 of accounting for materials of ACCA F2 Management Accounting. Sorry, this is the part 4. Before watching this, make sure that you have watched the part 1, 2 and 3. In case you haven't, then I've linked it in the description box below. In the previous chapters, in the previous parts, we have seen the economic order quantity. We also saw the economic EBQ, which is the economic batch quantity. And we saw all types of scenarios wherein we use the quantity discounts. Now we'll be beginning with the inventory calculation. Now inventory calculation or the valuation of inventory is something which we have done in the F3. So it's going to be a little bit easy for you if you have done that chapter. In case you haven't, then make sure to check out the F3 playlist and do that. However, I will be doing it again. Perpetual inventory. Perpetual inventory is the recording as they occur of receipts, issues and the resulting balances of individual items of inventory in either quantity or quantity and value. So what are perpetual inventories? Perpetual inventory is basically recording as in when you have an issue, as in when you have a receipt. Inventory records are updated using store ledger cards and bin cards. Bin cards also show a record of receipts, issues and the balances. The balances of item which is handled by stores. As with the store's ledger card, bin card will show materials received and issued. A typical store ledger card will look something like this. So this is how a store ledger card looks like. The receipts are written over here, the issues are made over here and on order. Inventory calculation. So why do we have to learn inventory calculation in the first place? We'll be using it for financial reporting because we need to show it in my financial statements, and then we'll also be using it for costing. So using it in the financial statement is something which we have seen in F3. Now we'll be using the same thing for the purpose of costing, to calculate how much to charge for a product based on the amount of inventory consumed. To charge units of inventory with an appropriate value, the business will consistently use an appropriate basis. So FIFO is my first in first out method. What is my first in and first out method? Whatever inventory came first, that is going to go out first. For example, if I have a bottle business and on 1st Jan I purchase, let's say, 10 bottles. On 3rd Jan I purchase, let's say, 30 bottles. And now if I have an order on, let's say, 10th Jan that somebody wants to purchase 5 bottles, which bottles am I going to subtract? Am I going to subtract from the stock which I purchased on 3rd Jan, or am I going to subtract it from my 1st Jan? So I will be subtracting it from my first in first out. Whatever stock came in first, that is going to go out first. So I will be subtracting from my 1st Jan inventory. Alright. Now what is last in last out? Last in last out is just the opposite. The same example, 1st Jan 10 bottles, 3rd Jan 100 bottles, 5th Jan I got an order of buying 8 bottles. So I will minus it from 3rd Jan. Whatever inventory came in last, I am going to let the last items go out first. So that is the second method. And then we have the AVCO or the WACO. AVCO is basically the average costing method and W is basically the weighted average costing method. Okay, M Limited has the following material transactions during the first week in March. So this is my opening balance. Opening balance is always my opening stock. You can just keep that in your mind. Receipts, issues, receipts, issues. Per unit price are rounded to 2 decimal places and the total figures are nearest to the whole number. So why have they given this note? They have given this note because you will be using this in your MCQs when the answer is also given. So if you look at this, you have opening balance, quantity, unit cost. So this is how you are going to write it down. Okay. FIFO, first in and first out, assumes that the material that are issued out of the inventory in the order in which they were delivered into the inventory, appropriate for many businesses like retailer who are selling fresh food using sell by date of rotation techniques. Look at this. In a FIFO, how is it gonna look like? Receipts are over here, issues are over here, and balance. What do you understand by balance? Well, how much balance is left? When I've given out stuff, it gets subtracted. When I have receipts, it's going to be added. Okay. So what is my closing inventory? My closing inventory will be my opening inventory, and whatever new I have purchased, so that is my receipts, that was my net purchases, recall that. And I'm going to minus the issues or minus the sales, so it's minusing whatever I've issued. So whatever I'll be left with would be my closing inventory. So opening inventory plus receipts minus the issues. What are my features of FIFO? There are advantages as well as disadvantages of using the FIFO method. First, it is logical. It reflects most likely physical flow. We usually do that, right? Whatever has come in first, we want that to go away first because we don't want it to become obsolete. Easily understood. Inventory values are at up-to-date prices. So even if there is a fluctuation in the market price right now, whatever is the latest is going to more likely be closer to my market price rather than something which came earlier. Acceptable to HM revenue and customs and IAS 2. So these are my laws, HM revenue and the customs. Disadvantages: issues may be out of date prices, obviously. At times of rising prices, profits are high, closing inventory valuation. Cost comparisons between jobs are different. So these are my different kinds of advantages and disadvantages. Moving on to my LIFO method, which is my last in first out method. Assumes that materials are issued out of inventory in the reverse order in which they were delivered. An uncommon method which is only used for a few business. Example: a coal merchant who stores coal inventory in a large bin. So if he is storing in a large bin, so whatever comes in new, that is going to be on the top, so naturally that will go out first. So that is what they are talking about. And the LIFO inventory valuation, same way again, receipts come in, issues are something which we give out, and balance is going to be whatever is left with me. Again, how do I calculate my closing inventory? Opening inventory plus receipts minus issues is going to be my LIFO. What are my features of LIFO? Advantages: issue prices are up to date. So as I told you that the last in prices is going to be more or less closely related to my current market price. In the times of rising prices, reported profits are reduced. Not really acceptable to the HM revenue and custom and accounting standards. So my accounting standards don't really like the LIFO method. They believe more in my FIFO method. Inventory values may be very out of date. So inventory values can be very out of date. Cost comparisons between jobs will be difficult. So that's it with my LIFO method. Now we come to the average costing method. By the word average, we are already understanding that we are going to be using an average in this. So all issues and inventory are valued at an average price. Here we will go and take a more realistic approach, and we'll be taking the average costing or the average price. The average price is recalculated after each receipt. So as and when my new receipt is added, I'll be calculating my average cost. We'll be doing the question, you will be able to understand. What is my cumulative weighted average price? Total costs before the issue divided by the total number of units before the issue. So what is my total cost before issuing divided by the total number of units before issue? So that's how I'm going to find my average price. So that would be the total costs. What all costs have been done before the issuing has been done divided by the total number of units which were there before the issue. So either ways, both of them are going to be before my issue. Could be appropriate for business such as an oil merchant where deliveries are fully mixed with the existing inventory. So that is something which is related to my inventory valuation using the AVCO method. So looking at my average costing method, look at this. Receipts are here, whatever I have received. And on this date, I have my opening balance. I have 10 opening balance units. Per unit costed me this much. So my balance is going to be 10 multiplied by 2, which is 20. Unitary method, normal. On 2nd March, I had receipts, which was 70 units. Each costing this much. So my total cost is this much. So what will be my balance now? Earlier, I had 10 from before. Now I am adding 70 more. So 70 plus 10 will be 80, right? And what is going to be my price? Think about it for a second. I bought it for 220. I got the receipt for 220. So how will I do that? Total cost is going to be 154, and my total cost is 154. To my total cost, I'm going to add the cost which I had from before. So to 154 plus 20 would give me 174. Now if I have number of units as 80 and I have my total cost as 174, how do I find out my cost per unit? Total divided by number of units. So 174 divided by 80, what is that going to be? 174 divided by 80 is going to give me 2.175, which is 2.18. So are you able to understand what I did? Let me just repeat, and I hope you're solving it along with me. Opening balance is given 10 units, each costing 2. The total is 20. On 2nd March, I got a receipt 70 units, each costing 2.20. So my total is this much. Now, what will my balance be? From before I had 10 units. Now I have purchased 70 more. So my units are going to be 70 plus 10, which is 80. Now let's go to the total costing. From earlier, I had a total costing of 20. From earlier, I had a total costing of 20. Now my new total costing is 154. So my new balance of total costing is going to be 20 plus 154, which will give me 174. And if I have my total cost and my number of units, then how am I going to find my cost per unit? I'm just going to divide 174 divided by 80, which is my total cost, divided by my units. Then I will get the middle row, which is the unit cost. Okay, one thing to keep in mind, whenever I'm getting an issue, whenever I'm getting a receipt, that is going to get added to my balance. Whenever I'm issuing something to someone, I will be subtracting it from my balance. Very simple. When I'm purchasing something, I will obviously add it to my balance. When I am making a sale, then obviously I'll deduct it from my balance. On 3rd March, I sold 40 units, which means I issued 40 units, each costing 2.18 each, and the total cost is 87. Now how am I going to do that? Earlier I had 80 units, now I have sold 40 units. So I'm going to remove 40 from 80, then I'll be left with 40, and then my earlier cost was 174. Now total cost of 87 I have given out, right? I have issued. So I'm going to minus 87 from 174, which will give me 87. All right. Again, on 4th March, 50 I have purchased. So I already have 40 over here. I will be adding 40 to 50. So 50 plus 40, that is going to be 90. And again 202 here. I'm adding the total with this total. And I'm going to divide this by this. Then I'll be getting this. On 5th March, I again sold something. And make sure that they didn't mention the balance. I'll tell you. Okay, now how do we find average price after 2nd March delivery? This is what we have discussed, right? This is what we have been discussing. Closing inventory valuation. Opening inventory plus receipt minus issues. So opening inventory is my 20. Opening inventory plus receipt minus issues. So what are my receipts? 154 plus 115 minus issues. So which is 87 is one of my issue, and 157. So I'm minusing that. Then I get my answer. So it's that simple. I hope you got the logic. What are my features of AVCO? Advantages: it is acceptable by the HM, revenue and customs. Logical, because all units will have the same value, because we are taking in the average into consideration. Issue prices and inventory values might not be actual purchase price, because we are taking the average, so that can be a disadvantage. Inventory values and issue price might lag behind the current values. What do you mean by lag behind? Because we are taking the average, so obviously it is going to be a little bit lesser than the actual price. The following information relates to TYUs 9 to 12. The business has opening inventory of 30 units. Okay, let's try to solve this logically without any tables. So we had 300 units. We are using first out 300 units, each valuing 4.50 each. So my cumulative is going to be 300 multiplied by 4.50, which will give me 1350. This was my opening stock, opening items, whatever. On 2nd May, I had issued 200 units. So from here, I'm going to minus 200, right? So if I'm going to minus 200 from here, 200, 4.50, 900. So I'm going to minus 900 over here as well. So here I'm going to be only left with 100 now. And here I'm going to be only left with 450. Alright. Now on 2nd May, issuement has been done. On 7th May, I received 500 units at 4.80 each. Alright. So 500 multiplied by 4.80 is going to give me 2400. Now on 20th May, on 13th May, I issued 400 units. Okay. So first I'm going to minus, since it is first in first out, I'll go to my initial thing and minus that. I have to give 400. Here I minused 100. So now this becomes 0. Now the rest 300 I'm going to minus from here, which would give me 200. So first in first out, whatever stock was first, I subtracted from there. The balance I'm subtracting from here. Now I'll be left with only 200. On 20 May, we received 500. Okay, so I received 500 more on 20 May at 5.00. Then on 28th May, I issued 450 units. So I issued 450 units again. So how am I going to do that? 450. From here I will minus my 200. So it becomes 0. And 450 minus 200 would give me 250. From here I will minus 250. So my stock which I am left with is only 250. 250 multiplied by 5.0. So I am only left with this much. 1250. I am left with 1250. What is my question over here? What is the value of issues? So what is my value of issues? How much have I issued? Alright. So my issues are going to be 200, 400, 450. So how am I going to do that? So I'm going to look at the costs where I used. So my initial 200, the initial 200 which I issued is going out from here. So that value would be 200 multiplied by the cost there, which is 4.50. The next issue of 400 was done from 7th May. So I minused, just a second. Yeah, so my next 400, first 100 minused from here. So 100 multiplied by 4.5. After that, my 300 I minused from here multiplied by 4.80. So 300 I multiplied by 4.80. Alright. And then my last issue of 450 units. So 200 was from here. So I'll write 200 multiplied by 4.80. And my balance 250 was 5. Alright. So when I add all this would be 1250 plus 200 multiplied by 4.80. 200 multiplied by 4.50. 100 multiplied by 4.50. 300 multiplied by 4.80. So adding all this, I'm going to get 50 plus 900 plus 960 plus 1250. That's giving me 5,000. So my issues price is going to be 5,000. Let's see if it's in the options. Right, so my answer is B. So I hope you understood how I did this. When I'm talking about first in, first out, I'm going to minus the items from when it came first. The initial time, I'm going to minus that. So that's what I did this. Watch the video again and try to do it. And how did I find the price of issues? At what price am I selling it? So at the price which I'm selling it, issuing it would be from the price of when I bought it. If I'm selling from receipt, then I'll be minusing from with this money. If I'm selling from 20th May receipt, then I will minus with this issue. So it's like that. What is the values of issues during the month using the LIFO method? So my LIFO method is just going to be the opposite. Instead of using the FIFO method, I'm just going to minus it in the reverse order, and it is going to work the same way. So I think you can do it by yourself. What is the value of closing inventory? So LIFO is just the opposite of FIFO. I think you can do it by yourself. So my closing inventory value will be opening balance, which is my 1350, plus total receipts, so the balance which I'm going to get, we have anyway calculated in the earlier, if you can go and recall. So my balance is going to be 1250. That is going to be my closing balance. So you can calculate the LIFO method. What is the value of closing inventory using the AVCO method? Alright, now let's do the average costing method. In the average costing method, we have to find it like that. By the middle value would be the division of the total upon total units. So by doing that, whatever your answer will be, it is 1231. You know the formula of it, right? I'll just quickly revise the AVCO method formula. My AVCO method formula is total cost before issue upon total number of units before issue. Now let's see the accounting for inventory. So how am I going to account for it in the books? Materials held in the store are an asset and are recorded as inventory in the statement of financial position. Accounting transactions related to materials are recorded in the material inventory account. So debit entries means increase in the inventory because it is an asset. So when I'm purchasing, I debit my inventory account because my assets are increasing. Returns to the store, when people return it to the store, my inventory increases again. Credits means a decrease in the asset or decrease in the inventory. When I'm issuing stuff to the production department, that means the materials are going out of my inventory, so I will decrease it, which means I will debit it. And when I'm returning to my suppliers, again it will deduct my inventory. Material inventory account is an asset, so it is going to have a debit opening balance, and work in progress is going to decrease my inventory because to work to start being done, I will be using the materials. Payables is going to be the material inventory when I have payables, so when I have purchased materials on credit. Materials returned to supplier will decrease my material production overhead account. That will again decrease my inventory. Materials returned to the stores, whoever returned the material, when the production department returns the material back to the stores department, it will increase the inventory. Statement of P and L, which I will come to, and then the closing balance. Let's read the notes. The opening balance held in the inventory is shown as a debit balance. Materials purchased on credit are debited. Materials returned to the stores cause inventory to increase. Direct materials used in production, the direct materials which I am using in the production are transferred to my WIP account, which is my work in progress account. Materials which are returned to suppliers would be deducting my inventory, so it will be shown on the credit side. Indirect materials are not a direct cost of manufacture and are treated as overheads. So I hope you understood what is the overheads. Overheads are something which are indirect, so hence I am not going to be including it in my inventory account. So I will remove it from my inventory and I will put my indirect materials into my overheads account. Any material write-outs are credited out, and the material inventory will be transferred to the statement of P&L where they are written off. So whenever I am writing off any material, I will deduct it from my inventory. The balancing figure is the closing balance at the end of this period. So my closing balance of the end of the period would become my opening balance to the next period. Beginning with my test your understanding number 13. So give me a second. Yeah, so issue materials to the production. So how am I going to deal with that? When I am issuing stuff to the production, it is going to reduce my inventory, so my inventory will be credited. So material inventory will be credited, and the work in progress is going to be there. Purchase new materials, which will increase my inventory, so my material inventory will increase, and creditors or payables are going to be credited. Materials returned to store from production, this will increase my material inventory account and it will deduct my VIP account. Materials written off, it will deduct my inventory account and I will send it to my statement of P&L to write off. Indirect materials are going to reduce my inventory as they will go into my overhead account, so they will be reducing my material inventory, and my overhead or my production overhead account is going to increase. Okay, so finally we are done with this chapter. Let's quickly just revise some of the formulas in the chapter. So my reorder level is going to be my maximum usage multiplied by my maximum lead time, and my economic order quantity would be given by EOQ, which is 2 times CO, cost of placing one order. D is my annual demand, cost of holding 1 unit per year. And when you're finding the EBQ, Q is the batch size, demand per annum, cost of holding 1 unit, cost of setting up one batch. R is my annual replenishment rate. So that's it. I hope you understood this chapter. In case you have any doubts, then you can ask in the comment section. Thank you.